Welcome, and thanks for joining us. Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the File folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. We're now ready to begin. Thank you.
Welcome and thanks for joining us. Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. I'm Pam Amato Demagayas, moderator for today's webcast. Our presentation will start in a few minutes. Before we begin, I want to quickly remind you that today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions. You can track your CPE progress by clicking the certification widget in the webcast console. Once all certification requirements have been met, a download icon will appear in the bottom right-hand corner of the widget window, and you will then be able to download a PDF copy of your CPE certificate. And now I'd like to introduce you to today's presenters, Wendy Campos and Patty Mayer. Wendy has been in public accounting since 2000 and serves as a tax leader of the firm's not-for-profit industry group. She focuses primarily on providing tax compliance and tax consulting services to hospitals, higher education institutions, foundations, both private and public, social service organizations, and other not-for-profit organizations. She's a current member of the Oregon Society of Certified Public Accountants, Philanthropy Northwest, and the American Institute of Certified Public Accountants. Patty provides tax and related tax planning services for not-for-profit organizations. She is a frequent presenter on various nonprofit tax topics at the University of San Diego Nonprofit Governance Symposium, the Salk Institute Tax Seminar on Private Foundations, the Moss Adams Webcast Series and not-for-profit seminars, and Council on Foundations, national and regional meetings, and presenter for the National Business Institute and Stratford Publishing. So with that said, I'm going to turn the webcast over to Wendy to get things started.
Thank you, Pam, and thank you everyone for joining us this morning. We always like to get a good feel for our audience, so we'd like to start off with our first polling question. What type of organization do you represent? Private foundation, a private operating foundation, public charity, other not-for-profit organization, Moss Adams employee, or other. Give a couple more seconds to get the best results that we can. All right, we'll go ahead and close the polls and take a look at our results. So we've got about 46% of other not-for-profit organizations and 25% of public charities, and it looks like about 12% of private foundations. Keep in mind that during this presentation, when we talk about expenditure responsibility, we will refer to some excise taxes. And for those that are public charities and other not-for-profit organizations on the line, those excise taxes would not apply to you. However, the content in this presentation is helpful for you because you probably request funds from private foundations, and this will give you a better understanding of why they ask for all the documentation that they ask for. Another good takeaway will be in terms of your grant-making procedures. If you make grants to organizations and you're not a private foundation, you will recall that on the 990 Schedule I, there is a question that asks about your organization's procedures for monitoring and following up with grantees where you funded information. So you might be able to pick up some best practices when we talk about the requirements that are put on private foundations in the grant-making area. So with that, I'd like to really quickly summarize our agenda for today. We will talk about taxable expenditures and what those are, expenditure responsibility and what that means, what happens if you violate expenditure responsibility requirements, and then we'll close with international grant making. Taxable expenditures. A private foundation and its managers are prohibited from making any taxable expenditures, and we're going to define what that is on our next slide. The private foundation and its manager can be liable for these excise taxes under 4945 if they knowingly and willingly agree to make a taxable expenditure, and we'll talk more about what knowingly and willfully agreeing to make a taxable expenditure means. A taxable expenditure. So in general, that would include amounts paid to carry on propaganda, influence legislation. It could include influencing the outcome of a specific public election. Could be a grant to an individual for study, travel, or other similar purposes. Now, that's unless you've gotten that pre-approved by the IRS. You will recall for private foundations, you can get pre-approval through the Form 1023 when you initially apply for tax exemption. Or there's a process if you've already been granted tax exemption and you've decided you want to start giving out grants for study, travel, or other similar purposes, you can use the Form 8940 to request pre-approval from the IRS for that grant process. So if you've done that, that would not be a taxable expenditure. Grants to non-public charities, unless the foundation exercises expenditure responsibility with respect to those grants, and that's what we're going to talk about primarily in this presentation this morning. And then expenditures for any purpose other than the foundation's exempt purpose can be a taxable expenditure. And as I mentioned, our focus today is primarily going to be on that fourth bullet point, grants to organizations that are not public charities or where expenditure responsibility is not exercised. And a couple things I did want to mention on this slide as well before we move on. The first three bullet points, for example, carrying on propaganda and influencing legislation, if you made an expense that would qualify as a taxable expenditure in that area, you couldn't exercise expenditure responsibility in order to avoid the taxable expenditure excise tax, just to kind of make that clear. You can do there are certain limited activities around lobbying and legislation that you can do, but it's very, very limited for a private foundation. And again, just to make sure you're clear, you can't give a grant specifically for that purpose. Otherwise, it will be a taxable expenditure. All right, let's talk about expenditure responsibility. This is generally procedures a private foundation must follow in order to avoid the Section 4945 excise tax. This tax is a two-tier tax. There's an initial tax on that taxable expenditure equal to 20% of the amount of the expenditure that's imposed on the foundation. Then there's 5% on any foundation manager that knowingly and willingly agreed to the taxable expenditure. And there's a limit on that, and that would be up to 10% or $10,000. And we'll talk about, again, what willingly and knowingly would consist of. Again, the tax is on the private foundation and then could be on that manager. Some examples of knowingly would be actual knowledge or sufficient facts that that foundation manager would have known the expenditure would meet the definition of a taxable expenditure. So for example, knowing that giving the grant to that organization, it's going to be used for political purposes, and knowing that that's prohibited by a private foundation, that would be willingly and knowingly. So that transaction would be subject to that 5% on the foundation manager, in addition to the 20% that the foundation is going to be imposed upon. Another example, if a foundation manager is aware that that expense may violate the federal tax provisions that govern taxable expenditures. There is also a secondary tax, often referred to as the second-tier tax. If your foundation has made a taxable expenditure in 2013, for example, and it was not corrected in 2014, and you're going to do the tax return again for the second year in a row, and you've still got this transaction, you could be subject to the second-year tax. The second-tier tax is 100% of the taxable expenditure. So the first time it was 20% that the foundation was subject to. The second tier, it's 100%. So if you gave a grant for $100 to a non-public charity, you didn't exercise expenditure responsibility, you would be subject to that $100 would be the tax that you would also have to pay. Then if any foundation manager knowingly and willingly agreed to that taxable expenditure, that second tier tax is 50% of the amount of the taxable expenditure. And that tax is assessed if the foundation or the foundation manager failed to timely correct the expenditure, which brings up a good point and takeaway. When a foundation has entered into a taxable expenditure, you not only have to pay an excise tax on it, but it's also got to be corrected. Otherwise, you could be subject to the second tier tax. And to correct it, typically it would be asking for the money back from the organization that it was given to. It could be getting the applicable report. So maybe you gathered enough information to form the reports that you need to under expenditure responsibility. You just didn't actually go through those fine-tuned follow-up steps to actually report to the IRS. So maybe that's what correcting the transaction might consist of. And just as a frame of reference, we don't have the forms as a screenshot for you, but if you wanted to make a note, when we talk about the question on the 990-PF that's related to taxable expenditures, the 990-PF Part 7-B line 5 is the question that would trigger not giving to a public charity, for example. And then if you actually had the taxable expenditure and you had to report, you would report that on Form 4720 Schedule E. So this next slide goes through a quick table of what type of grant recipients expenditure responsibility applies to. And as you can see on the left, it would not apply to U.S. public charities, U.S. and foreign government units, exempt operating foundations, executive order organizations such as UN, World Health Organizations, the Tropical Tuna Commission. But it would apply if you were giving grants to U.S. exempt organizations that are not public charities. This would be your 501c6, C4 organizations, private foundations, certain supporting organizations, Type 3 non-functionally integrated, all supporting organizations if they've got disqualified persons with respect to that foundation and there's some sort of control there. Any newly formed public charities who have not received their IRS determination letter yet. And we see this one quite often. They're a new organization requesting a grant from a private foundation, and with the timeline right now with the IRS, it's taking forever to get those IRS determination letters. So that one's coming up quite often. For-profit entities. Any foreign organizations for which no equivalency affidavit or determination letter has been obtained. And we'll talk about equivalency affidavits just a little bit when we talk about foreign grant making towards the end of the presentation. One thing I wanted to note back up at the top on the right-hand side, when expenditure responsibility applies when you give to a 501c6 or C4, we actually see that one quite often. But think about this. A lot of 501c6s and C4s have related foundations that are 501c3 public charities. So that might be easier, or you might be able to give to that organization rather than give directly to the C6 or the C4. If you are a foundation that has not had to exercise expenditure responsibility before, or you just aren't really ready to go down that road yet and don't want to go through the extra steps of due diligence, that might be an option there. All right, we're going to move on to our next polling question. True or false, grants for charitable purposes made to foreign government units do not require expenditure responsibility? All right, we'll just give another second or two. Okay, we'll go ahead and look at our results. False, 82.6%. And that's actually true if it's a foreign governmental unit. If you go back to our previous slide with the table, you would not have to exercise expenditure responsibility if giving to a U.S. or foreign governmental unit. I want to talk a little bit about public charities. And as you know, as private foundations, you can give to public charities. And we'll talk a little bit about what type of information you should ask for to document and confirm that an organization meets the definition of a public charity. But you've got your 509A1 charities. These typically are driven by donation revenue, contribution revenue. There's 509A2 charities, which are primarily program service revenue driven, fee for service. And Section 509A3, these are the supporting organizations. But remember, only if they're a Type 1, 2, or functionally integrated Type 3 that's not controlled directly or indirectly by a disqualified person could you give to those organizations without exercising expenditure responsibility. And again, remember, the 501c4 and C6 organizations do require exercising expenditure responsibility. So for a public charity, in terms of checking their status, there's a number of different ways that you can do that. You can obtain their IRS determination letter, which is always a good best practice regardless. You can check the IRS Business Master File. You can confirm the charitable status on IRS's Select Check, which is formerly Publication 78. You could use a third party, and there is an IRS revenue procedure that talks about that. And you can also check the IRS Internal Revenue Bulletin, which is publicized weekly, to confirm a grantee is not listed as losing their exempt status. And a good takeaway about that last bullet point is if you're a private foundation that does multi-year grants or pledges, it's really important that you go back through your check process in terms of checking the status, again, because it's based on when you make the payment, again, cash basis, not when you awarded the grant. So you may award the grant, and the grant is covering multi-years, and 3 years later you're still making payments. You still need to be following up and checking again that they're still, first of all, have exempt status and haven't been revoked, and two, that they still meet the public charity status. And I did want to clarify that we will take questions at the end. I know we've got some questions here along the way, but we'll try to save those till the end if that works for the group. In terms of checking the status and using a third party, the information that would typically be delivered by a third party would be a report that would give you the grantee's name, their EIN, public charity classification, whether their contributions are deductible under Section 170, and then a statement that the information is from the most currently available IRS monthly updates, and then the date and time of their search results. So we've talked a lot about when you're required to exercise expenditure responsibility, and now we need to talk about what that means and what information you're going to have to collect and report. When it's required, a private foundation needs to be exerting all reasonable efforts and establish adequate procedures in order to see that the grant is spent solely for the purposes for which it was made, to obtain full and complete reports from the grantee on how the funds are spent, and make full and complete reports on the expenditures to the IRS on the Foundation's Form 990-PF. So in terms of making sure that the grant is spent solely for the purposes it was made, this can require pre-grant inquiry, written grant agreements, and some record keeping. You've also got to document that pre-grant inquiry by documenting the charitable purpose of the grant, the grantee's ability to achieve the goal of the grant. So think about any past history you may have with that grantee. Has that grantee applied for a grant from you before? Have you had any trouble getting reports from them? Have you had any trouble where they weren't spending the money the way they were supposed to? Do you know or have a good idea of their management team and their board? And then access the grantee's ability to provide reports on the use of the funds. So obtain an understanding of their accounting policies and procedures. Do they reconcile reports? Do they do forecasts, budgets? Ask for that type of information as well. In reviewing a potential grantee, again, as part of your pre-grant inquiry process, you'll want to look at any organizing documents that they have, get a feel for whether they're registered in any states, if they're in good standing with those states, or any countries, if they're operating in foreign countries as well. Review their current financial statements. If they have audited financial statements, you definitely want to ask for a copy of those. And then you want to review their prior Form 990s that have been filed with the IRS. And again, make sure they're current in their filings and again have not been revoked. The written grant agreement requirement is required for all expenditure responsibility grants, which must, and this must be signed by an officer, director, or trustee of the grantee organization. The written commitment is going to need to state that the purpose of the grant is for charitable purposes, and again, that needs to be within the Foundation's exempt purpose as well. And then the grants and earnings will not be used for purposes other than charitable. Sometimes we've even seen it go further to state that it won't be used for propaganda, legislative activities, political purposes, for any private shareholder or individual. A lot of times some of that language is built into written grant agreements as well. The agreement must require the grantee to do the following: repay any portion of the grant which is not used for the purposes of the grant, submit full and complete annual reports on their progress and use of the grant funds, maintain records and receipts of the expenditures and make its books and records available to the grantor for inspection, and not use the funds which would create a taxable expenditure, which is kind of what I was just alluding to on the previous slide: lobbying, political activity, any grants to individuals where you haven't gotten a pre-approval, and then that they won't re-grant to another organization unless expenditure responsibility is followed. And lastly, for the record-keeping requirement, private foundations should retain all records of expenditure responsibility grants made. They may be requested by the IRS. The IRS might want to see a copy of a grant agreement for expenditure responsibility grants. They might want to see a report received from the grantee. Or they may want to look at the grantor's reports from independent auditors, their audited financial statements, for example. And again, this would usually be if our private foundation is under an IRS audit or exam and they're looking at your grant activity. For purposes of the full and complete annual report from the grantee requirement, this would consist of an itemized, detailed listing of the grant fund expenditures made during the period, summary descriptions of the grantee's progress toward fulfilling the purposes of the grant, a statement with respect to the compliance with grant terms, and it would again need to contain that signature of a grantee authorized officer. And then a final report, and this would be maybe you've got a multi-year grant again, and this is you've granted them an award and it's going to be paid out in multiple years. So now it's time for them to do the final report. Much of the same information, an itemized detailed listing of all the expenditures made during the entire grant period though for this one. Summary description of their progress, and again should contain the signature of the grantee's authorized officer. All right, it's time for another polling question. If the grantee expends all of the grant proceeds and fulfills the purpose of the grant within the grantee's reporting period, an annual report and a final report are still required. Yes, both an annual report and final report are still required. However, the reports do not need to be signed by an authorized officer of the grantee. No, the final report would just be needed and a detailed listing of the grant expenditures would not be required. No, the final report would just be needed in this case, which would include a detailed listing of all the grant expenditures made, and it must be signed by an authorized officer of the grantee, or not applicable. You do not need any reports from the grantee. Give a little more time on this one. All right, we'll go ahead and take a look at our results. We've got 24.6% say yes, both an annual and final, but they do not need to be signed, and 72% said no, the final report would just be needed in this case, but it must be signed. And that's correct. The report definitely would need to be signed, and if it all fell in the same period, the same tax period, one report would be sufficient because the cumulative amounts would be the same as the amounts in that period, but definitely would need to be signed by an authorized officer of the grantee. All right, in terms of expenditure responsibility and reporting to the IRS, you do need to make full and complete reports on the Form 990-PF. And this would include reporting on every expenditure responsibility grant that's made, paid, or for which a report is outstanding during the year. And we do have a handout available within the program that gives an example of the information you would need to report to the IRS. But on our next slide, we also have some bullet points where we're going to go through those really quickly. You would need to include the grantee's name and address, the date, amount, and purpose of the grant, the amounts expensed by the grantee based on the most recent reports that they've given you, the date of those reports, whether they've diverted any part of the funds from the purpose of the grant, the dates of the reports received from the grantee, the dates and results of any verification of their reports, and then keep in mind that if you're a private foundation reporting when a grant is made to another tax-exempt private foundation for an endowment or capital equipment purpose, there's a special rule that applies in that situation. Sorry about that. There was some hold music there for a moment that got me distracted a little bit. And if a grantee fails to make reports to the private foundation, you should withhold all future payments on that grant until those reports are furnished. And then obviously you'd want to consider that in the future. When we talked about pre-grant inquiries, one thing you always want to consider is history with a grantee. So if you've had a grantee in the past that didn't provide reports, you want to consider that if they ask for a grant in the future. And then one more thing I wanted to mention is on program-related investments, PRIs. Keep in mind that some do require expenditure responsibility. Specifically equity investments, usually these are with for-profit taxable entities. So again, you'd want to do some pre-work inquiry, get a written commitment signed by an officer that states the purpose of the investment, includes agreement by that organization. Usually with program-related investments, though, there's very carefully written, drafted documents that are specific PRI agreements and usually contain all the charitable language and the requirements within them. But again, you do still need to report to the IRS annually for certain program-related investments, so keep that in mind. All right, I'm going to go ahead and turn it over to Patty, and she's going to talk about violations of expenditure responsibility agreements.
Thank you, Wendy. So, okay, I get the good part. There's been a violation on your expenditure responsibility. There's typically 3 areas where this can happen. The first one is a diversion, where the use of the funds by the grantee isn't consistent with what you wanted them to be doing, or there's a failure that the grantee has not submitted the required reports. And the last one is you just didn't meet the expenditure responsibility requirements. So when you think about a diversion, what do you have to do? Well, first you have to take corrective action. You have to try if there's a diversion of funds. You want to, maybe the grantee has used the money for another program and it was unauthorized. Maybe they did something like they conducted lobbying. You found that out. So that's not okay. And a diversion can be treated as a taxable expenditure. So it's really, really important that you're involved with your grantees, that you look at the reports they're supplying to you. You have to evaluate them. You just can't take them and go, okay, that's great. You may want to do on-site visits if it's necessary, meet with your grantee on status. The main thing is you don't want to be passive, especially if there's a problem. So what happens if this has all happened? What can I do to try to not treat this as a taxable expenditure? Well, you want to take all reasonable and appropriate steps to try to get all the grant money back, or some of it back, or get the money restored to its original purpose. So the organization is able to find the money to put back into your grant amount and then spend it. So if they're able to do that, any remaining funds that they're having, they have to be dedicated for grant purposes. Also, you have to withhold, if this isn't happening, you cannot continue to give them payments. If say it's a multi-year, or maybe you pay it out over a number of months, you don't want to continue giving them money. You want to make sure there's assurances there won't be future diversions, and you're probably going to want to require that they take extraordinary precautions that they don't have future diversions. Now, a violation, if there is one, it is reported on the Foundation's Form 990-PF when you talk about the disclosure of the ER grant. And if there is not full recovery and there's corrective action by the commissioner could be prescribed, they could say, all right, private foundation, you need to improve your methods of ER. You need to improve your selecting of grant recipients, or they could actually, depending upon the case and circumstances, have other requirements that they put onto the foundation. And lastly, on the diversion, the foundation doesn't have to attempt to make recovery by legal action if it appears a judgment would not be satisfied. So that's not required by the law if you know that won't even help you. Okay, the other violation is submitting reports. So you must have complied with ER. You have to make a reasonable attempt to get the report, and you would withhold future payments until the report is received. So another out on this one, say you are trying to get the reports and you're not having any luck with this, and you conduct an investigation that indicates all of the grant funds were really used for the purpose that they were supposed to. There wasn't a diversion. That would be considered a correction. If you made all reasonable efforts to obtain it, you did the investigation, and you've notified the service of your failure to obtain it. So say none of these work and you do have a problem, you didn't follow expenditure responsibility or something's happened. When the taxable expenditure rises to the level of a penalty, you have to file Form 4720 and pay the penalty. But this is an excise tax that you can try for abatement with reasonable cause. So you could tell your story to the IRS what did happen, and it's possible they will abate the penalty. So that's good news. Self-dealing, they don't have that, but this one they do for private foundations. Okay, international grant making. Before I get started really on this slide, I just wanted to emphasize similar comments that Wendy made. If you were, this is true for a public charity as well. On the Form 990 Schedule F, grants to foreign organizations, they want to know about your maintaining records. Do you have proper procedures and things in place so there's no diversions? How are you monitoring the grants? So it doesn't really, international grant making is not only a nonprofit area or private foundation area, it touches public charities as well. Also, the IRS has been really concerned about international activity. Last year, they did not produce a work plan. They typically do that every year, and it outlines the focus of Treasury with the IRS. Well, back in 2012, it was up for quite a while. They're still concerned about international activity. They want to make sure that assets are used for charitable purposes. They want to make sure grant making furthers the exempt purpose. And they've also looked at a lot of private foundations under examination that have conducted foreign activity. They looked at all sorts of things if their revenue was over $500,000. Another comment I want to make, because the whole area of international grant making has attention of Congress. Back in 2011, the Secretary of State, Hillary Clinton, helped develop and launch what they called Global Philanthropy Working Group. And what this is, it's a group that they engage different foundations with members of U.S.-based philanthropic community members. And one of the objectives was to identify U.S. legal and regulatory reform for easier cross-border grant making, because it's not real easy to get money abroad. So that nothing has really happened significantly in this area, but it is on the radar there, so that's good. So before you even decide, oh, I want to make an international grant, there are other options that you might want to consider. The first one is making a grant to U.S. public charity that conducts programs abroad. That might be great. You might want to make a grant to a U.S. 501c3 public charity that is the Friends of organization. So it's basically set up in the U.S. and it gets money abroad. The thing to be careful with that option is you cannot earmark that the funds are intended to go specifically abroad, because when you donate to the public charity, they own the money. They have to control discretion of the funds. You can also make a grant to an international organization designated by executive order. This would be your UN, or my favorite, the Inter-American Tropical Tuna Commission, because it's my favorite. They're here in San Diego. So they're all over the world watching tuna and doing reports. other option would be setting up a donor advised fund with a community foundation that supports foreign organizations. Now, the one thing to remember on this, if you are a private foundation, you can make a qualifying distribution to a donor advised fund. You don't own the money anymore. It's a fund that is now owned by, and most commonly held in community foundations or financial institutions and ARM, where they have donor advised funds, but they own and control the money. Now, if the donor advised fund spends money abroad if they do international grant making, you've pushed the expenditure responsibility requirements to the supporting organization level. They have to conduct ER. So it would get you off the hook and they would need to do it. So it's a planning technique if that might work for you. But you have given up control and you only advise where the money can go. They do not have to follow your wishes, but hopefully they would. So there's a little bit of risk there. You can make a grant to a foreign grantee that is a college or university, and it's an agency or instrumentality of a foreign government, and it's going to be used for exclusive for purposes, for charitable purpose. But when you get into the educational arena, they have to have a non-discrimination policy. Also, again, you can make a grant to a foreign government or agency or instrumentality of a foreign government. So if none of those work and you still want to make a grant to a foreign country or a foreign organization, you have to either follow an equivalency determination criteria or expenditure responsibility. So in looking at grant making abroad, you want to do it, you've decided, yep, that's the way we're going to go, we're real happy with that. There's three categories that I'm going to talk about next. And the first one is the choices of, well, should I do equivalency determination or should I do ER, expenditure responsibility? The second group is anti-terrorism rules. This typically gets people a little bit nervous, but we'll go over some of the rules there because you don't want to fund terrorist activity. That would be really bad. And then the last item we're going to go over is income tax withholding. So when we look at equivalency determination or expenditure responsibility, some of the advantages of equivalency determination is the grantee is treated that it would be a U.S. public charity. So that's kind of nice. And you don't have to do expenditure responsibility. Disadvantages are you have to have a good faith determination and reasonable judgment. There's potential audit risk. Another disadvantage, a lot of foreign organizations may not be able to provide all the information that's required to make this equivalency determination. And the last one is the information must be current. If the grantee is not a charitable enterprise, you can't use equivalency determination because under that you're saying they would qualify as a U.S. public charity. They also, maybe they don't meet the public support testing, then you would have to use expenditure responsibility. Maybe they're really more like a foundation. They have a substantial contributor that keeps putting all the money in. There's a lot more work at the front end using equivalency determination, but it may pan out that that's okay. It's also really helpful if the grantee is re-granting to other organizations because you don't have to do secondary expenditure responsibility if it's re-granted out, which can be a lot more complicated. Advantages for expenditure responsibility are the rules are pretty straightforward. Wendy just explained them all. They're not that hard. No, I'm just kidding. They're pretty straightforward. You can do a lot of grants using expenditure responsibility. Disadvantages, more record keeping. The grantee has to segregate the grant funds into separate accounts on their books, and there are special rules for grants to purchase equipment. So under a foreign equivalency, there's reasonable judgment and a good faith effort that they would be a public charity. You can do it two ways, affidavit from grantee or opinion of counsel. Now on the opinion of counsel, there were revised proposed regulations in 2012, and they broadened this area to tax practitioners. So there's other options out there. And then repositories are another one. Repositories, that actually, what that is there's two right now that are pretty well known. It's called NGO Source and NGO America. And what they do, what the idea of this is, if you have all these private foundations trying to grant maybe to the same organization overseas, outbound, each one of the private foundations has to do the equivalency determination. Well, wouldn't it make sense that there's a repository that can say, hey, this foreign organization is good. It meets all the requirement. We know, we've tested them. Here's your certificate done. Well, there's been recommendations to amend a Rev Proc that governs this equivalency determination, 9294, and it hasn't really gone real far. The IRS, Congress comes up with a priority guidance plan which talks about legislation that is top of their list they're going to be working on. Repositories aren't on the list, unfortunately, not yet. And then also one thing to be careful of, I was looking at the NGO Source website yesterday under their frequently asked questions, and they make a comment that they are working on getting a legal opinion to state that their organization meets the IRS requirements for equivalency determination and it can be relied on by grant makers. So it's not completely solid. It would give you a good feel. You can test it out, but I would feel more comfortable if it was in the legislation and we knew it was 100% good deal. Also, it doesn't take away other risks like your anti-terrorism and other things you need to be concerned about. So Rev Proc 9294, that was what I mentioned earlier. This basically outlines the equivalency determination. You have to get required organizational documentation, and that would not only include whatever their documents are for their form of their entity, you also need to understand their dissolution process, purpose, their activities, planned activities, financial information. That sounds not too difficult because we're in the U.S. We have GAAP standards. We file income tax returns. We do all sorts of things. But in another country that may not be as developed as we are, that might be a really big task. Meeting the public support testing. Well, this Rev Proc 9294 has not been updated to the current public support testing that's on our Schedule A right now for 990s, which is a 5-year testing including the current year. Under this Rev Proc, they look at the prior 4 years, so you have to consider that. You'd probably need to test both ways. There can be no private benefit in Norma, lobbying, political activity, kind of those things. Also, you cannot use this Rev Proc if it is a merger or liquidation, so certain circumstances it wouldn't work. Okay, anti-terrorism and executive order. When 9/11 happened, the executive order 13224 was signed and enacted. It prohibits and blocks transactions with terrorists or any individual or organization associated with a terrorist. This is all governed through OFAC, which is the Treasury Department's Office of Foreign Assets and Control. And what they do, they publish what we call the SDN list, and there's a link to that, the Specially Designated National List. So it identifies terrorists, and individuals, entities, and groups. The Patriot Act is also there, which covers security relating to issues and strengthens our government's ability to combat terrorism. Under the Patriot Act, criminal and civil penalties are imposed if an organization provides material support or resources that it knows or intends to be used in terrorist acts by foreign terrorists. So if you know this, all that, you just need to address this and make sure you have documentation that you have looked at the SDN list and things. So I've got a couple more slides that I won't read everything to you because we're running out of time, but there is a guidelines for the executive order, and it's one of the attachments in here, and you'll want to get basic information and document that you've done this. So you'll want to make sure you have their names, you have historical information, any public findings, and all that. You also, in the guidelines, they talk about a vetting, basic vetting of the potential grantee. You've looked at public information, you've looked at the SDN list, you've obtained names, you've required grantees to certify they don't have any association, and that. Now, if you are doing this search and you find something suspicious, you want to report the information to Treasury because they always welcome that and they will investigate. So if you do find anything, let our government know. Last polling question. Best practices with respect to making a foreign grant include which of the following? Reviewing OFAC's SDN list documenting the grantee file, obtain basic information about the recipient before making the grant, conduct a reasonable search of public information about grantee to determine whether it is suspected of terrorism activity, provide any suspicious information to Treasury. A, B, and C, or all of the above. Okay, I am gonna move forward. Oh, you guys, good. The answer is F, all of the above. Great job. Okay, my last two slides talk about withholding. Now, this is just a really hard concept to me. When I first heard that there was a withholding, or learned there was a possible withholding requirement for an international grant, it made absolutely no sense to me because it's a contribution. You're giving a grant to another organization. Well, to get your arms around it, think of, is the grantee offering services? Is there activity conducted? So that's partly, I think, why they have this withholding requirement. The rate is generally 30%. It can be adjusted by treaty. So you want to look at what countries you're working with. You report the withholding on Form 1042, and there could be an exception. No income tax withholding if the grant activity will not be in the U.S. So if it's all the activity is outbound, you don't even need to worry about it. Or there's a treaty exemption. Or the grantee is a foreign tax-exempt organization. So here it has received an IRS determination letter. It's considered a foreign U.S. corporate or organization. The grantee is a designated international organization, or it's to purchase property. So what happens if they look at the source of the grant. So if the grant came from the U.S., went outbound, so you need to determine where is the activity conducted. All outbound, you're off the hook. You want to make sure the grant is clear on where the activities are being conducted. If it's going to be both in another country and the U.S., you want to bifurcate and make two grant agreements so you don't taint the entire agreement subject to withholding. Because if you can't tell where the money is going, what's the U.S. part, what's not, then withholding will apply to the whole amount. So for example, if you have a grant to a foreign country, but you want to bring a representative to the U.S. to appear at your gala to talk about the grant and you're paying for them to come in, you would want two grants, one to cover the trip to the U.S. and the other one to stay outbound and use the money for the charitable purpose. And that is a wrap on my part. Okay, any questions or comments?
Patty, we do have a couple of questions I think we can answer fairly quickly, and then a few that we can follow up on.
Okay, great.
There was one question on what is a private operating foundation that was very early in the presentation, and I'll go ahead and take that one. A private operating foundation, they're a private foundation, but they essentially are running programs instead of making grants to public charities that run programs. They also have different tests they have to meet. They don't have a minimum distribution requirement, but they have to spend a certain amount of their assets and expenditures have to be for charitable purposes, again, for those programs that they're running. That's kind of high level, the difference between a private operating foundation and a private foundation. Patty, there was one that you could probably answer related to Form 990 Schedule F. What are the current rules for reporting on Form 990 Schedule F for grants to U.S. charities for foreign purposes?
Well, if you are making a grant to a U.S. charity, that would be reported on Schedule I, not on Schedule F, because if the money was from this organization to the charity, if it all is U.S. transfer, it's a Schedule I documentation. So for instance, if you made a grant to Project Concern International, it would show up on Schedule I. Project Concern International operates in about 20 or so underdeveloped countries around the world, but you technically have not made a grant to a foreign country. But on Schedule F, they're pretty vague, and they just want to know what you are doing. So I actually work with some organizations. Any grants that go outbound as a public charity, even if it's not coming from a donor advised fund, they still exert expenditure responsibility on all outbound grants, and they disclose that on their 990. That is, they are taking, the full-on. They're doing everything they can to follow procedures, almost as if they're a private foundation. They're meeting basically the highest requirements.
And Patty, there's actually another question that ties into that I'll go ahead and ask, and maybe you have a little bit to add to what you just said in terms of a public charity exercising expenditure responsibility. The question is, we are a 501c3 public charity. I understand there are some grants we make that are subject to expenditure responsibility, but am not clear on how we report that since we do not file Form 990-PF. Will you please address this?
Okay, so then the best place to do it is look at, is it inbound U.S. Schedule I? There's a section, it's the form or the schedule that you use to report U.S. charity contributions. Schedule F is foreign. Contained in both forms is the last section is really like a notebook where you can write whatever you want, and it's pretty long. You can flow over to Schedule L if you run out of room, but basically that's where you would explain what you are doing, and that's where I've seen public charities that are following expenditure responsibility. They explain exactly what they're doing on the form there.
Okay. We do have a couple more that I think are related. We might be able to answer these rather than have to follow up afterwards. How do you check exempt status of religious organizations that do not file 990s or have a determination letter? And the other one, very related, same question, but related to governmental units or charter schools. They do not appear in GuideStar or IRS tax select check, and determination letters can be very old. Patty, what do you usually see in terms of that with your client base? I don't get asked that question very often in relation to religious organization and governmental entities. Usually the IRS Business Master File could have those designations.
Yeah, that is, some churches do file for exempt status. Not all, they're not required to, and many don't, so they may not have a determination letter. I think what I would do would, and I haven't been asked this either, but my gut would say I'd want to see their organizational documents on how they're related, and are they under the umbrella of a bigger organization? Do they qualify as a church? I mean, you could look at items like that. The other one, for governmental units, typically what we'll do is we'll Google things, and a governmental unit will be under a higher governmental entity, so you may have to go up, kind of do research, like does that make sense? Are they real? Maybe who is funding the unit? Go through them if you want verification.
And the other thing I can think of with governmental units specifically is maybe the audited financial statements, because they've usually always got to be audited, and there might be some mention of all the organizations that are instrumentalities or related to them in some way.
That's a great idea, yep.
Yeah. Well, thank you everyone for participating in our webcast. If you have any follow-up questions, our contact information is included in the slides, both in the front and the back.
Great. Thank you again. Thank you again to Wendy and to Patty and to all of our attendees for participating in today's presentation. As a reminder, if you attended in a group and would like to receive CPE credit, you must complete the group attendance sheet in order to receive credit, and you can find that in the handout section of the console. If you participated as an individual, you should be able to view your CPE progress in the certification widget of the webcast console, and if you met all certification requirements, you should see a download icon in the bottom right-hand corner of the widget window. And you should be able to download a PDF copy of your CPE certificate there. I'll keep the webcast console open for a few minutes to give you time to download the CPE certificate. Also, here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete the survey, as your feedback is very important to us. And finally, please visit our website, mossadams.com/NFP, to learn more about future webcasts, subscribe to our email alerts, and find on-demand versions of some of our previous webcasts. Thank you for joining us, and we'll hope you'll join us again next time.